Now, there's this deadline today. It's kind of a deadline. It's kind of not a deadline. Even if there's an agreement in principle today, there will still be negotiations going on in the coming months. So nothing final will happen today either way. But good Lord, those poor Canadians. They all thought they were going to be in Europe on vacation, and now they're still trying to hammer this thing out at the last moment. And remember, if they hammer something out, Congress still has its say, and it's going to be a long ways to go.
When we got the headlines, Ron, I thought immediately, this sounds just like another negotiation by the Trump administration. Put it out there that we're going to be
Trump
really
world,
tough.
Canada.
Yeah. And look, first of all, I don't understand trade policy as it is in the Trump administration, let alone the negotiating tactics that are employed here. And one has to wonder why they didn't pursue a much simpler course of action. Both Canada and Mexico were party to the Trans-Pacific Partnership, the TPP, that ultimately was turned thumbs down upon by the president. All of this could have been negotiated. Many of the things that they agreed with Mexico about were included originally in the TPP, and this could have been a very straight deal. Canada would have been in, Mexico would have been in. There would have been no need for all this kind of sturm and drang that we're seeing now, and instead we're tearing everything up, going bilateral, and doing it in such a ham-handed way that it's creating ill will among the very good trading partners that we do have.
Big mistake. They should have just renamed it the Trump-Pacific Partnership.
Yes.
He would have signed off on it immediately.
So why, Jimmy, when the U.S. and Canada are roughly in balance in terms of trade, why is the president playing so tough with Canada?
One, because there's still a deficit. Two, the president's view of reciprocity, which is a long-standing goal in trade policy, is very different from what it usually is. He views the fact that there is any sort of tariff on a U.S. product, then we are being done. Now, even though there might be other tariffs on our side, so it all kind of balances out, he still views that we are being taken advantage of. And the key thing that drives his policies is that we will not be taken advantage of, we will not be made fools of, and we will drive an extraordinarily tough bargain, even if it's humiliating for the other side, which is exactly what it seems to be for Canada right now, is to drive a humiliating bargain that the Canadians are going to be forced to acquiesce to.
Not only that, he looks at trade deficits in purely numerical terms. It's just about the dollars and cents. It's not literally about where we add value, where capital should be flowing around the world relative to its returns, the types of things that real business people and economists look at. I met with a group of steel industry executives a couple days ago. They are getting hammered by these steel and aluminum tariffs, which remain in effect even if we conclude the NAFTA agreement. And if you talk to middle-sized steel businesses and some of the hoops they have to jump through right now, and could actually be hurt if the tariffs were rescinded because they bought really expensive steel that they would have to sell at a loss if something changes. Everybody's in such a state of disarray and uncertainty over what's going on trade. I don't think the story's really gotten out how much U.S. business is being affected by what's going on and all the type of uncertainty and kind of bizarre.
Is it your premise that the wounds are deeper than what the economic data shows?
I would say yes right now.
What it will show in the next month?
What I heard is that some of the pass-through costs, particularly in the steel industry or anything affected by steel and aluminum, won't show up till the fourth quarter of this year, first quarter of next. But the industries themselves, the businesses themselves run by individuals or small corporations are already being hit and taken some really hard body blows.
Jimmy, we had a guest on the other day who said that the risk to the economy is not directly from trade, but it's derivative from trade in that it may cause inflation to spark higher than it otherwise might, which might then cause the Fed to act more precipitously than it otherwise might. Is that a legitimate concern here?
I think it's a concern. I think it's a concern more that if these trade conflicts spread beyond NAFTA, which seems entirely possible, of course, to Europe and China. But the Fed angle is so interesting because this administration, this economic team, has sort of ignored the impact of the Fed when they came out with their tax cut plan, a big fiscal stimulus plan, despite we're in a long expansion. It's almost as if they didn't count on the Fed having a vote, that the Fed would be raising interest rates, and more stimulus means more rate increases. So this, to me, is another example of kind of forgetting that the Fed has a vote on fiscal policy, even if their job is monetary policy.
And the flip side, just to add a final point to this, there are two other points I would make. Is number one, there could be more concern about growth than inflation ultimately if a worldwide trade war slows down the global economy. China is already weakening. Number two, we have an emerging markets crisis that's taking place right now that's being exacerbated by the strength of the dollar, Fed policy, and these concerns about what's happening to China as a consequence of the trade war.
Yeah.
So those are other variables that are playing in. They haven't hit home yet. But if you look at all these currencies that are crashing around the world, whether it's in Argentina, whether it's now in Indonesia, the rupee is at its lowest level in 20 years. There are things happening that could be problematic.
And of course, China weakening will only encourage the Trump administration to take a tougher stance in its trade conflict with Beijing.
All right.